So, property investors, what do we do when a mortgage that we were going for, a mortgage that our broker was applying for, when the rate gets pulled, when the offer, or should I say, the rate, the deal is no longer there? First thing you do is don't panic. All right. One thing we do need to remember is there are companies out there whose main purpose is to make money from lending you or your company money. So again, when rates get pulled last minute and so on, don't worry about it. There's more lenders out there. Of course, I know it's inconvenient, definitely. I mean, one of the reasons I've just put this video out on, I'm creating this video is because yesterday I must have spoke to my broker. It felt like 50 times, but it's probably about 8, 9 times, something like that. Wanting different things, going with a different lender, which rate should we apply for, what's going on, and that type of stuff. So again, regardless if it's TMW, the mortgage works. Some of you might be with Kent Reliance, Precise, all the rest of the stuff, Birmingham Midshires. There are lenders out there that want to lend you money, and again, some of the percentages might be different, some of the product fees might be different. So on our deal analyzer, when we're going for refinances, because in an ideal situation we want to pull as much money out as possible plus more, we always work out the total cost of the deal. So for instance, the one that was pulled, the one that we were going for, was a 5-year product with Leeds Building Society, and the rate was 5.44% with zero product fee. Now, again, depending on how experienced you are, don't always be lured into the fact that it's got a zero product fee, or the rate, like I said, there it's 5.44%, is lower than any others. You need to work out the cost of borrowing over the time period. So, for instance, that one that we were looking at was 5.44%. It had a zero product fee, and the overall cost of lending, not including the solicitors, because again, solicitors' costs, depending on who you use, whether or not you need to use one off their panel, the overall cost of lending that for 5 years would have been £30,000 and 600. £30,600. Now, again, some of the other things we were looking at there, the dearest one we were offered was 36,500. So there's £6,000 difference there. £6,000 difference. Still a 5-year product, but obviously that was 6.49, but a 0% product fee like the one we chose anyway. So again, depending on how experienced you are, don't always be lured into the low, what I'd call like the headline rate, 5.24%, because it might have like a product fee of £5,000, and that obviously gets added on. So the one we did end up going for yesterday was still luckily with Leeds Building Society, and it was 5.24%. So if I'm looking down, but that had a product fee of £14.99 or £14.95. But again, one thing I want you to pick up from this is you've always got to look at the overall cost of borrowing. So going back to the example before, the one that we wanted to choose before it was pulled, the cost would be 30,600, but this new one is 30,974. So there's only £374 difference over a 5-year period. Now, the broker at first said, well, should we go with a different lender? And again, this is where you need to know your broker really and be able to, they should always be on the other end of the phone. They shouldn't be one of those that can only respond to you, I'll respond to you within a 5-day period. You want them to be on the phone if you're active and investing all the time, and if you're looking for deals, if you're pushing them over the line always. So yeah, we've gone now for the deal 5.24%, which is 0.24% cheaper per month. However, which again means that our monthly payments will be smaller. However, in the long run, it's £374 dearer. So yeah, I hope this helps any budding property investors out there. Don't always be hoodwinked or excited by a low headline offer. Work out the overall cost of borrowing. Again, the same if you're getting cars on finance or anything like that, really. Work out the overall cost of ownership. So again, in 5 years' time, what we'll do is when we've got this over the line, in 5 years' time, we're just going to move lender anyway to see what it's like. I'm expecting over the next 5 years for there to be a property correction, a property crash, if we're familiar with the property cycle. But again, who knows? We're dealing with economics and so on. So I hope this helps some people. Please subscribe to the channel. Try and put more videos out here on here for property investors. And yeah, good luck. Keep taking steps further forward. But remember, property equals wealth if you're doing it properly, if you're educated. And every time you purchase a property, you should be increasing your net wealth, whether or not you're looking to flip it or whether or not you're bringing it into your portfolio to generate the passive income. So yeah, good luck, everybody. Thanks a lot for watching. My name's Dervish, and take care. All the best.